Hello and welcome to the Farm Journal Live. I'm editor Clinton Griffiths from the Farm Journal newsroom with the latest on the coronavirus outbreak and its impact on the agricultural industry. Let's get straight to today's news. The food supply remains strong and safe. That's the message from the Trump administration that they're trying to get across to the nation right now amid that high demand at grocery stores. Vice President Mike Pence and Ag Secretary Sonny Perdue seeing how delivery operations are going just for themselves, touring a Walmart distribution site in Gordonsville, Virginia. The two also thanking workers there who are helping to keep the food supply going. Meanwhile, another high in demand item at the grocery store, orange juice. And according to the Wall Street Journal, it was the best performing commodity in the first quarter of the year. Futures price for orange juice concentrate is at its highest level since June of last year. That's when traders were anticipating a strong hurricane season for states like Florida. The Wall Street Journal estimating the panic buying at the store because of the coronavirus has pushed sales of orange juice up 40%. Let's go ahead and bring in Bill Biederman of agmarket.net. And Bill, it's pretty hard to panic buy number 2 corn out there in farm country. Commodities still kind of struggling with what's going on in this coronavirus outbreak.
Well, that's really true. Corn isn't something we particularly buy, but we have been buying a lot of meat, and meat cases are still not fully stocked, even where I'm sitting right now. So that will require more feed use. Obviously, with the test weights and the quarterly stocks, more feed use is expected in the future. But offsetting that is the ethanol problem.
Right. You know, that's one thing. You know, we did get a prospective plannings report from USDA yesterday, kind of a mixed message there. If you look at the stocks, quarterly stocks report, it sounded like at least some somewhat supportive news there, although market's struggling a bit today.
Well, they took 660 million bushels off of last year's stocks. So if you take that same number and take it off of last year's, not the crop that's in the bin, but the previous year's ending stocks of 2.2 billion, really we're down at a 1.6, which would make sense. I mean, that kind of aligns itself with basis and the type of market activity we've seen. And it's in line with what we've been saying for a year. But now on top of that 1.6, which would factor in a true feed use, we have to lower our ethanol because of all the shutdowns, and that's going to bring our carryover back up, we think, pretty close to where USDA is at.
Right. Let's take a look at this graphic that we got from the American Farm Bureau. They've been tracking the impact of the coronavirus on a lot of our major commodities here. If you look at it, wheat right now unchanged, soybeans down about 8%, corn 14%, live cattle 25% lower, class 3 milk 26% lower, cotton down 31, hogs 31, ethanol right there at 35% lower, class 4 milk 36% lower. Bill, as we talk about and look at the major impact on our commodity markets here, what does that graphic say to you?
Well, the meat is the most puzzling, of course, because the retail demand for meat is through the roof, and yet, the anticipation and fear that there'd be packer shutdowns just killed the cattle live market to the point where we all heard about $400 packer margins. So we're expecting this to correct. Cash is holding in there at 115 to 121. There's a little bit of a slowdown in the box demand right now, but not enough to really affect the market. So futures should converge with the cash at some point in the next couple of weeks as we go into cash settlement. The ethanol down 35% is purely a correlation to what's happening in the crude oil market. And yesterday it was reported that Midland, Texas crude producers were receiving between $6 and $12 a barrel. It's just pathetic. Wow. It's a bloodbath. One of the shale producers down there just declared Chapter 11, so we're going to hear more of that. But that will eventually all straighten out. On the main agricultural commodities like wheat, there's 6 countries now that have slowed down or halted exports from a variation of flour to wheat to rice to different things. So that's shifting demand to the U.S. The U.S. is not the most competitively priced, but is the most reliable. Same with soybeans. We've seen soybean demand bump up here because of slowdowns in Argentina and slowdowns in Brazilian shipments. That's shifted some demand to the U.S. We expect that will continue, but it'll be up and down because they're just entering their peak export season. But the bottom line is the U.S. has shown to be a very reliable supplier during these problems. The corn market being down 14% again, that's ethanol related. We could almost offset those numbers with feed use and probably some exports, but we're still waiting for China. And if China does come in on this corn the way we think they will, it'll be a much brighter picture. But we're not trading the bright picture right now.
Right.
We're trading the demoralized ethanol problem.
Yeah, it is hard to kind of get people excited to spark a rally, and a lot of that is sentiment, right? Trying to change the sentiment out there. One last question while I have you, Bill, talking about planting. Do you think, given where prices are right now, as we ramp up planting going into this 2020 season, that we'll see any adjustments to what people were planning to do based on prices?
Yeah, well, first of all, everybody who can qualify for prevent planting will take that. That's kind of a no-brainer at this point. And the 97 million acres that the government came out with on corn, yeah, we think that's going to be high. We suspect there will be some shifting towards soybeans, and the soybean number will probably be larger than the 83.5.
Okay, well, we'll keep an eye on it. Appreciate it as always, Bill. Thank you for joining us and kind of keeping us updated on what's going on with our major commodities price-wise. Let's touch on a couple other news stories real quick. Tyson Foods says it will pay approximately $60 million in what it's calling thank you bonuses. That money will be given to 116,000 frontline workers and truckers in the U.S. who are supporting the company's operations every day to provide food during this COVID-19 outbreak. Tyson saying that the eligible team members will get a $500 bonus, and it will be paid out during the first week of July. It follows a similar announcement last week by Cargill. And Louisville-based United Food and Commercial Workers Local 227 wants first responder status for Kentucky and Indiana workers in retail grocery, meat packing, and food processing industries. A union spokeswoman saying that these workers are facing an increased risk of exposure to the virus, and being recognized as first responders would provide them with greater access to things like masks and gloves, as well as other services like childcare. Minnesota, Michigan, Vermont, they've already extended that designation. Right now, why don't we go ahead and bring in Frank Mitlerner. He's a professor at UC Davis in California. He works in the animal science department and is an air quality specialist. He goes by @GHG Guru. And Frank, one of the things that we've been talking a lot about is the change in the economy, the impact to our overall emissions, and how this may change the way that we view this issue going forward.
Yeah, hi there.
Yeah, absolutely.
So-
So do you think that this changes the discussion around animal emissions or emissions in general? This is a pretty unique set of data that we're collecting right now.
Yes, but there's also quite some confusion around these emissions that we see. So first of all, this pandemic has had tremendous impacts on the economy globally. We just heard what it did to our agricultural sector here in the United States, but globally, we see in areas such as Wuhan, China, or northern Italy that the quarantine that people are in has a profound impact on transportation, on industries, and so on. Pretty much, we are shutting down the global economy right now. And as a result, all the emissions now go away. Those emissions that were typically associated with fossil fuel use, meaning burning gas, any kind of industry, cement industries and so on, they're all at a standstill. And as a result, their emissions are now drastically down. So, but these emissions that are going down right now are emissions that are fossil fuel related. So so-called oxides of nitrogen or carbon monoxide, carbon dioxide, they are going down. Those emissions associated with agriculture, such as ammonia or methane and several others, they are not really going down. So while farmers are hoping that this is good news for them, it really isn't, because these are different type of emissions that are going down.
Do you think we'll be able to that the world will be able to go back and isolate and look closer at those emissions and maybe get more accurate numbers and counts on that?
Well, absolutely. And I think this is really critical because, in my opinion, the Achilles heel of particularly animal agriculture has been methane. And methane over the years has been characterized in a way that I would say is faulty. Because in contrast to other greenhouse gases, methane is not just produced and emitted, let's say by a cow or by a rice paddy, But methane is also destroyed, and it has a lifespan of only 10 years. The other gases have a lifespan of 1,000 years. Methane is only in the atmosphere for 10 years and is then destroyed. And currently, all accounting methods out there only look at the production of methane and not the destruction. But that's really critical because there is actually a budget for methane. It's not just produced, it's also destroyed. And if you leave out the destruction, then the production of that gas looks enormous and daunting when indeed most of that just goes away. So, and that is currently not being accounted for. And on top of that, agriculture is not just producing, it's also sequestering, meaning reducing greenhouse gases through their soils and plants, also not being accounted for, and farmers don't get credit for it. That needs to change, and it needs to change fast.
Yeah, do you think that really will be the focus in the conversation going forward, is agriculture being able to sequester as much as it's emitting?
Well, there are many interested parties who try to prevent that from happening because they like the current narrative. There are many players out there who feel that animal agriculture in particular should cease to exist, and they try to replace it with all different kinds of alternatives. And they're using the methane narrative as a main argument. And in my opinion, people in animal agriculture need to wake up to that. They need to support accurate quantification efforts for their emissions and then continue to do what they have been doing, which is drastically reduce these emissions. So completely separate from the corona issue is the fact that our farmers and ranchers have drastically reduced their emission profile over the last few years. For example, here in California, 25% reduction of methane has occurred over the last 2 years. And that's a major accomplishment by our farming community, which has worked very closely with our regulatory agencies to achieve that 25% reduction of methane.
Yeah.
In fact, when you do the...
Go ahead.
I'm sorry.
Yeah, go ahead.
So I just wanted to say, when you achieve a 25% reduction of methane, then that means that sector no longer has a warming contribution because you're now taking more carbon out of the atmosphere than you put in.
I guess my final question is, in a pandemic, as we're talking about people staying at home and eating differently and living lives differently for the time being, do you think this has a long-term impact and effect on the whole conversation around this?
I think so, but for different reasons than many people think. For example, before this pandemic broke out, large parts of the media touted plant-based alternatives to meat and milk as a new thing, something that we should all implement. What the pandemic has shown is that meat and milk and eggs are flying off the shelves. And if you now go through the supermarkets, take a look what does not fly off the shelves. It's very interesting for me to see that what was touted to be the new reality of a plant-based world without animal-based products is not really what we see in times like these.
I appreciate the insight as always. Thank you so much for joining us. And of course, we're going to continue to cover this topic and many others associated with the coronavirus outbreak and its impacts on agriculture and potentially the long-term impacts on this industry. If you'd like to follow along and keep up with our coverage, you can do so by going to www.agweb.com/coronavirus. That's where we'll be collecting and putting up the latest articles on this topic. Thanks so much for watching today on our Farm Journal Live.